Somewhere between curiosity and pure temptation, the idea of copying elite investors starts to feel irresistible. That curiosity is exactly what Autopilot leans into, promising a hands-off way to follow politicians, hedge fund managers, and even AI-driven portfolios without doing the research yourself. At its core, Autopilot is an investing app designed to replicate the portfolios of well-known and supposedly successful investors. You connect an existing brokerage account, such as Robinhood, Webull, or TD Ameritrade, choose a pilot portfolio, and let the app handle the rest. When your selected pilot makes a trade, Autopilot sends the same order to your brokerage. In theory, this feels like outsourcing your investing decisions to people with far more resources and insider insight than the average retail investor. The concept itself is genuinely clever, and the execution initially feels polished. Autopilot has already facilitated over $1 billion in investments and reached more than 3 million downloads since launching in 2023. Getting started is straightforward. You select the portfolio, link your brokerage using bank-level security, and decide how much capital to allocate. From there, the automation takes over. Trades are mirrored automatically, notifications keep you informed, and every holding is visible so there are no hidden surprises. Because of this transparency, the app feels trustworthy at first glance. However, this is where reality starts to clash with the promise. The biggest problem is reporting delays. Politicians are allowed up to 45 days to disclose their trades publicly. That delay matters more than it sounds. During testing, one Pelosi-related trade was reported days after it happened, and by the time Autopilot could copy it, the stock price had already surged by nearly 50%. Instead of capturing the upside, you're often buying after the move has already happened, which completely changes the risk-reward equation. Fees make this issue even harder to ignore. Most pilot portfolios cost around $100 per year. While that sounds reasonable on the surface, it becomes brutal for smaller accounts. If you're investing $500, that fee alone represents roughly 20% of your capital. You're starting at a major disadvantage before performance even comes into play. On top of that, each pilot group requires a separate subscription, so exploring multiple strategies can quickly become expensive. By the end of the experience, the verdict becomes clearer. Autopilot delivers on its technical promise of copying trades, but reporting delays, high fees, and inconsistent results make it difficult to recommend for most investors. It's an innovative idea constrained by structural limitations, and that's something worth thinking about before you press the copy button.